Nobody really buys stocks anymore. If you take a look at options data, options data is off the hook. I mean, retail investors are piling into options at a pace we haven't ever seen before, period. Here's what you need to know before the bell this morning. This has been one of those weeks we've had just a ton of headlines, right? We've had the Fed, we've had the whole DeepSeek thing on Monday, lots of panic, lots of, concern about markets. A couple of things went on. First of all, the markets really didn't do a whole lot. Yeah, we had the sell-off on Monday, bounced right off the 50-day moving average, rallied back up sharply on Tuesday, just ticked off a little bit yesterday. It wasn't big, a little bit of profit taking, working off some of that overbought condition that we had. Retail investors bought this dip heavily on Monday, big surge in retail buyers actually buying the market on Monday with that dip, and especially in NVIDIA. Lots of retail buying of NVIDIA on that dip on Monday. Other interesting, though, things here is that nobody really buys stocks anymore. If you take a look at options data, options data is off the hook. I mean, retail investors are piling into options at a pace we haven't ever seen before, period. Record options volume continues to become more record-y. I don't know if that's a word or not, but they're just getting, the records become more records. Almost every day, the amount of options volume is going up, and the amount of call options versus, and again, we're just talking about options, right? Options volume, well, it could be calls or puts. It's primarily calls. Investors are fully long this market. And again, on Monday, we saw a big uptick in retail investors kind of piling capital into the markets. And again, nothing wrong with that, but this is that whole kind of market environment that we've talked about before, is that FOMO is now the function of not, the fear of missing out on the way up. It's also the fear of missing out on the bottom. So when you have a sell-off, there's an immediate run-in by retail investors, this fear of missing out on trying to tap those bottoms. Again, this works until it doesn't, which is going to be, very important, because we saw this back in 2022. A lot of the money getting put into the markets is very speculative. It's not something that people are going to survive on a very sharp downturn. I'm not saying a sharp downturn is coming, but when it comes, all these people that are leveraged long in options and very leveraged bets are going to get really, really impacted very negatively. We're going to see a lot of devastation of retail wealth really kind of getting wiped out when we do eventually have some type of sharp downturn. For whatever reason it is, that's going to happen, and unfortunately that'll be the case. But overall, the market is doing just fine. We've got, when we take a look at kind of what's happening, again, the market is certainly kind of working off some of that previous overbought condition that we talked about. But importantly, we're just kind of forming a very defined wedge here. So either this market's going to make a breakout run back to new all-time highs, or we're going to break down here and come back down and retest recent support around the 100-day moving average. But importantly, really ever since December, we've just been in this big wide consolidation band. So the market's really kind of digesting this big run up that we had last year, that 25%, 23, 24% gain from last year. Really have just been digesting that here for a bit. So despite all the turmoil of stocks and markets and everything else that's going on, it's really just been a big consolidation. And these consolidations are never fun. It brings out the most bearish of headlines, of course, as is always the case. This time is different, it's over, whatever it is. But markets can't just go straight up every day. So we've got to have these periods of consolidation, got to have these periods of correction. We've been in that period here for a good bit of time here, but can certainly last a bit longer. February tends to be a fairly, since we are wrapping up the month of January, February tends to be a weak month overall. March tends to be a little bit better. We're still in the seasonally strong 6 months of the year. So again, we got to take that into account. But expect this consolidation. It could last here for a while longer, particularly as we wrap up earnings season. But that's what you need to know before the bell this morning.